If you've seen any news about real estate in the last couple months, you've probably seen the doom and gloom headlines of prices are falling 20%, the market's going to crash, everything's going to burn, interest rates are through the roof, and you're probably wondering what's actually going on in the market. Well, in this video, we are going to look at the top 3 reasons why the market is changing and subsequently prices are falling. Before we get into things, if you like this kind of content, please subscribe to our channel and like this video. And if you're looking to talk about this kind of content or just real estate in general, you can click the link below and book a call directly with our team anytime. The first and main reason why we're seeing a change in the market is because of increasing interest rates. Higher interest rates directly impact buyers' affordability in the market, so they can afford less because their monthly payments are more, and that's obviously going to have an impact on price. During the pandemic, interest rates were at an all-time low. The 5-year fixed mortgage was around 2.5%, so money was very inexpensive to borrow, and therefore buyers could spend more on housing. Those same 5-year mortgage rates are now around 5.5%, which is quite a large jump in a very short period of time. And what it's left buyers with is less affordability and less money to spend on housing as their mortgage payments are going up because of the interest rates. Now, as we talk about these increases in rates, a lot of people are going to wonder, why are interest rates going up? And the simple answer to that is inflation. So the Bank of Canada increases their overnight bank rate to combat rising inflation rates. And we're going to take a quick look here at this graph. This is the last 20 years of inflation. In Canada, the target inflation rate is around 1 to 3%, which you'll see in this gray box here throughout. And over the last 20 years, they've done a pretty good job at performing within the 1 to 3% inflation. But you can see in the last year, inflation has skyrocketed to 30-year highs of around 7%, and now it's actually over 7%. So what we're seeing here is rapidly increasing inflation, and the Bank of Canada is scrambling to increase interest rates to combat this inflation. They've already announced a couple of large interest rate increases this year, and there is another one coming this month, and I wouldn't be surprised if there were more to come throughout the remainder of the year. The second reason we're seeing changes in the market are because of decreasing demand and increasing supply. Now remember, the real estate market is very heavily influenced by supply and demand, and those are influenced by other exterior factors. So during the pandemic, we saw extremely high levels of demand because money was very cheap and very low levels of inventory. And that caused increasing prices throughout the entire pandemic. Now we are seeing the exact opposite. As interest rates increase rapidly and the news keeps talking about more interest rate increases to come, we are seeing more buyers step away, take a back seat, and are a little more cautious to buy, which is bringing the demand down. And we are seeing houses sit longer on the market as sellers are expecting to get unrealistic prices that they saw back in January, February, March, that maybe their neighbor got down the street. We'll take a quick look at the numbers so you can see what's happening here. So the number of new listings at the start of last year was low, and as we got into January, February, March, it started to increase, and now every month we're seeing over 500 new listings, which is quite high. We didn't really see those numbers throughout the entire pandemic. And now on the flip side, number of sales, so homes that are selling, peaked in February, March when we saw the peak in pricing at around 400 sales, and now these numbers are dropping, and in June they were below 200 sales. So what that means is less homes are selling, and homes are selling for lower price because there's less demand. So looking at the absorption rate here, that's the percentage of homes that are actually selling within this first month. Most of last year, this number was sitting around 100% or over 100%. And you can see in February, it started to decrease, falling just below 75%, down to 50% in April and May, and now we're sitting around 36%, meaning 36% of the homes that are listed this month will actually sell this month. And to look at a chart to get a bit of a visual, you can see the gap that's starting to happen between the number of new listings and the number of sales. And as this gap starts to get larger and larger, we will have houses sitting for longer, prices will start to fall even more as there's less demand and there's more supply in the market. The third and final reason we're seeing the changes to the market and prices fall is because the increasing prices that we saw in the last 2 years were simply unsustainable. Over the last 40 years, the average increase in prices in the GTA per year is around 6 to 7%. In the last 2 years, we saw 15% in 2020 and 20% in 2021, which, like I said, is unsustainable. And looking at a visual here kind of puts it into perspective. You can see the pandemic start here, right in this little dip around March, April of 2020, and just how quickly and how much prices increased until February of 2022, which is the peak. And now that we have a few months of data this year, you can see that prices are starting to fall. So simply put, prices increasing 20% a year could not continue forever. I mean, household income's not going up that much. Household savings are not increasing like that. So we knew at some point there was going to be a change, there was going to be a correction, and that's happening now in the way of rising interest rates, changes in the supply and demand levels, and a little bit more of a stabilization in housing prices. So we hope that gives you a good understanding of what's going on in the market, why it's changing and what's actually happening, and sort of how to cipher through all of the headlines that you're seeing in the news regarding real estate right now. The Bank of Canada is announcing another interest rate increase this month, so we will wait to see what happens then, but it's likely that prices will continue to fall as interest rates and buyer affordability does decrease. I hope you enjoyed this video. As the market continues to change, we will continue to keep you updated. Have a great day, and we'll talk to you soon.